This recording goes through an example where we record journal entries using a job order cost system. Okay, this is the B version of exercise 20-8. So Monitor Landscaping has a job order cost system. They have the following information related to the first quarter operation. So materials were purchased on account for $213,000, and the factory wages incurred were $92,000. So we have raw materials inventory and its accounts payable because it was purchased on account, and we have factory labor and we have wages payable because it says incurred. Then we have materials requisition forms, and we have timesheets or time tickets. So if you notice, we have some indirect usage here. So the indirect usage is going to be going to manufacturing overhead. So when we do the journal entry for this, it does tell us what is assigned to specific jobs, so those will have to go to the job order sheet. So we can add up the amounts that go to specific jobs, and that will go to the work in process inventory. So 153,530 is going to go to work in process inventory, and the 4,800 goes to manufacturing overhead. The total amount of raw materials requisition is going to come out of the raw materials inventory. For labor, we have total labor of $92,000. So the labor that went to jobs will go into work in process inventory, so that was 84,500, and the indirect usage amount goes to manufacturing overhead, so 7,500 goes to manufacturing overhead, and then the 92,000 comes out of factory labor. So after you do this allocation or the assignment of the labor account should be 0. Number 3, we have overhead costs that were incurred. This is in addition to the direct labor, to the labor and the raw materials. So these were other costs that were paid, and it was incurred, so that means it was on account. So we're debiting direct manufacturing labor directly and crediting accounts payable. We have depreciation on machinery and equipment. So depreciation on those would go to manufacturing overhead, and this goes to accumulated depreciation. So this is new. You haven't seen this before. So instead of debiting depreciation expense, it just goes into manufacturing overhead. Now we have allocation or of the predetermined predetermined overhead rate. So this says it's 70% of the direct labor cost. So what you will do is you'll go back and look and see how much we charged over the direct labor. So the amount of cost of direct labor was 84,500, and then overhead will be charged 70% of that, or 70 cents on the dollar. So you'll just multiply the cost of direct labor by 70%, or 70 cents for each dollar, and you get 59,150. So you debit that to work in process, credit the manufacturing overhead account. So they ask you to move the cost of the jobs for A20, A21, and A23 to finished goods. So before you can do that, you need to figure out what the ending cost is for those jobs. So for those 3 jobs, we need to go back and look at the requisitions sheet. So you have to go back to the direct materials requisitions and the factory timesheets, and then you also have to go back and apply that 70% materials predetermined overhead rate to the direct labor to get the manufacturing overhead. And then you can total those up. So what it's saying is the cost of the jobs that are completed are these, and then that $232,180 is the value of the jobs that are completed, and we're going to take that out of work in process inventory and put it into finished goods. So those together are the costs of the jobs that have been completed.